Hey, good morning, everybody. It is Tuesday morning, June 29th, 2021, 7:37 in the morning. Let's just jump right into this. Things looking, well, let's get a refresh so we got current data. Excuse me. Things looking much better than they have in recent days. You're getting this 7-day column pretty much wiped out. So we still got a 30-day and a 90-day column before we get back to where we were. Let's go over the list. Not financial advice, never is, never will be. But I've been telling you guys about IOST is one that has oddly raged back for me recently. But XDC, man, if you look at what this is about to be so big, people, and it's so cheap right now. It's not financial advice, but you guys know I've been covering it a ton. And it's going to sit right next to these two when it's all said and done. That's my opinion. Whatever. So, anyway, going to the total market cap for the altcoins minus Bitcoin. One thing I wanted to go over real quick as we do rage back. We do have 4 days of straight green candles, which we have not had since May, which is awesome to see. The one thing you want to be careful of is as we approach our climb back up to the top, you got the 618, the 702, and the 786 are probably the three most reactive Fibonacci levels. Definitely the 702 and the 786. So all I'm saying, and this is not financial advice, it's just my own personal strategy, as we approach up into these ranges, which will be 1.1 trillion, we still have about 400 billion to come back before we get there. But when we get back in this range, I will be devising a plan involving some stable coins and some possible rotation. I will be taking profits as we get into this range. I'll probably take some more in this range. And if we wind up in here, we'll see what happens then. Just something I wanted to cover briefly. Let's go. Coinbase CEO, our goal is to list every asset where legal. We're not going to cover that, but that is letting you know that they want to have all the crypto. Unfortunately, they do not have XRP right now, but when they do, just imagine that. Grayscale's crypto holdings rise $1.1 billion as Bitcoin keeps recovering. I saw something at the bottom of this article that I thought was cool. Where is it go? Yeah, at the time of writing, Grayscale holds 651,000 Bitcoin, 3.15 million in ETH, and millions of hundreds of thousands of altcoins and crypto trust. That's a lot of crypto, man. TPICAP to launch Bitcoin exchanges with Standard Chartered, Fidelity. Big names, guys. We're not going to get into that article, but that's pretty big. Kathy Woods, ARK Invest enters Bitcoin ETF race. The firm is partnering with 21 shares in a bid to get Bitcoin ETF over the finishing line with U.S. regulators. I will not bet that she will be the first. I think you'll see Goldman or JP Morgan hop out the gate first, even though they're not really pounding that table right now. That's usually how things go. According to SEC filings, the tech investor is partnering with investment product firm 21 Shares and submitting a Bitcoin ETF application. It would tap 21 Shares' expertise in spinning up crypto exchange traded products, mostly in Europe. They join the swelling ranks of companies hoping that this will be the year the SEC approves a Bitcoin ETF. The SEC has swatted down dozens of ETFs proposals in recent years. Would join the board of Amun Holding, the parent company of 21 Shares, in May. Interesting stuff. Excuse me. Market wrap. Cryptocurrencies rise and despise Binance UK warning. Crypto markets rose despite regulatory crackdowns from the UK and China. Analysts expect continued resiliency above the 30,000 support line. Also, interested stuff. Bitcoin miner revenue drop. Bear market drawdown. Mining difficulty adjustment. Ethereum funds see record outflows. Altcoin roundup. Talks about safe dollar. Musk on Doge. Stable coins. It's a cool article. You should check it out. Active Bitcoin miners now unlikely sellers thanks to profit boost. Difficulty drop a gift to remaining miners. So yeah, the hash rate and everything being affected, which was like the biggest move down it's ever happened. The mining puzzle is 24% harder despite revenues being up 154% on a 7-day average basis. Since a very large proportion of hash power is currently offline and in transit, the next difficulty adjustment is estimated to be a negative 25%. As such, miners who remain operational are likely to become even more profitable over the coming weeks unless price corrects further or migrating hash power comes back online. So, pretty cool stuff. I like this article. Bears back off, but Bitcoin price still wavers below 35. Bitfinex BTC flows come into focus while the selling continues. STH have realized losses. Short-term holders have realized losses only slightly less than the March 2020 capitulation event. Long-time holders are willing to spend coins with an average cost basis fluctuating between 9.2 and 16.3 this week, suggesting a high degree of uncertainty. Further insight into the current market conditions offered by Crypto Quant highlighted Bitcoin inflows and outflows at Bitfinex as a possible gauge for market developments. Funding has now been negative for 11 straight days. Shorts are paying longs to keep their positions open. Bitcoin rally brings relief to the altcoins. Most altcoins starting to turn around in price as Bitcoin showed life above the 34,000. So you got some breath coming back into it. The big price driver we're looking for is hash rate increases. Maybe one of the large drivers that tells the market Bitcoin is back. Let's listen to what this guy has to say.
If we move it back into kind of the mining conversation, which seems to be a major driver of miners leaving China, setting up shop in Wyoming, Texas, Florida, Kazakhstan, everywhere else, the big driver that we are looking for is hash rate increasing. Although it has taken a dip over the weekend with price rising on some interesting technicals, we do believe that once hash rate truly bottoms and begins to rise at a steady rate, a maintained rate, we believe that that may be one of the large drivers that tells the market, okay, Bitcoin is back.
And just notice, guys, timing is everything. A lot of these fundamental factors are coming back into play. You see where the technicals are bringing in. I'm telling you, I can feel it. It is wound up tight right now. Hydropower stations, now for sale amid China's crackdown on mining. Secondhand hydroelectric power plants with installed capacity of roughly 50 megawatts are being actively sold in China following the government's clampdown on the mining industry. One seller claims that it's possible to stealthily mine Bitcoin if you purchase one. You can secretly mine cryptocurrency if you buy a hydropower station. Yeah, good luck with that over there. Gold Telegraph says nearly 80% of Bitcoin mining occurred in China leading up to the crackdown. The crackdown on cryptocurrency mining comes when the digital yuan is almost ready to be rolled out. Coincidence? You judge. Hashtag being played. China, man, they are always on the move. Believe that. Why is this actually fantastic news for Bitcoin? The largest infrastructure displacement in modern history is taking place. Roughly 45% of the Bitcoin mining industry is relocating continents. Does this affect users? Blocks may take an extra minute to be mined temporarily. Other than that, Bitcoin is completely unaffected. Bitcoin mining is largely self-contained industry. Banning mining does little to inhibit Bitcoin transaction or exchanges. They are totally distinct concerns. Yeah, but that's just a really roundabout way of avoiding that question. You're going to see a diversification of mining operations around the world. We've been seeing that trend over the last 2 years as large mines are built in Europe, the U.S., and a variety of other geographic locations. But that trend is going to accelerate hard now. And I think that's fantastic, man. If Bitcoin's, it is the largest drop in hash rate in the era of industrial mining. As of today, mining difficulty is expected to drop by 25% this Friday. What was I going to say? Yeah, I think it's really good for the decentralization narrative because it was not decentralized when it was 65% in China. I don't care what anybody says. So now that you're having to go to Europe, other parts of Asia, and the U.S., that might actually lend into that narrative for Bitcoiners. What is a digital store of value? This is straight from the Goldman Sachs website. And these two guys are arguing that other cryptocurrencies beside Bitcoin are better positioned to become the dominant digital store of value. They talk about Ether beating it as a store of value. Value always stems from use. So then you start getting into use case, utility. You guys know how I feel about that. I'm not a maxi in any direction, but I am a utility maxi. And I like what he says here. Q's Third Eye Blind Jumper from Michael Saylor, Max Kaiser, and Pomperoni. Crypto firms are giving up UK regulatory registration bids. The number of companies abandoning their bids to register with the financial watchdog have increased by a quarter in less than a month. The number of companies abandoning their bids to register with the financial... it's the same thing that damn headline said. 51 had dropped their bids in early June, a number that has now increased to 54. The news follows closely after the FCA banned crypto exchange Binance from undertaking any regulated activities. Binance withdrew its application in mid-May. Crypto firms have until March 31st, 2022. Hey, it's my birthday. With the FCA for the regulator to determine whether they're meeting anti-money laundering and counter-terrorist financing standards. And just 6 companies have successfully completed registration. What I think is interesting about that is, I keep talking about the regulation coming in. They are going to basically cut things down. It is going to thin out big time. You're going to have a handful of winners. You're not going to have as many options. It's all about the money. Bitcoin's novelty will fade, according to top Fed official. I saw this a while back, and this guy was quoted as saying, "Gold will always glitter, but novelty by definition fades." He draws parallels between digital currencies and parachute pants, which became fashion sensations in the 1980s, only to fade away into oblivion shortly after, at least until I was in high school in the early 2000s, because we had some big-ass pants. He added that Bitcoin is a highly speculative investment. They don't fear stable coins. The reserve has traditionally supported responsible private sector innovation. They need to talk to the SEC about that. And also, I saw another guy talk about how once the novelty faded from Bitcoin and most of it was bought up, he did see that you could see a major correction on it once the hype fades, but I don't know if that's happening anytime soon. The new Silk Road, a special report. We are not going to read all of this, but this is a fantastic article. It goes over all kinds of stuff, what's going on, faster, cheaper money, the globalization of the digital yuan, peer pressure from around the world. It talks about the implementation of CBDCs and all that kind of stuff, cross-border, all kinds of cool stuff. The part I wanted to highlight at the end is where it says, if anything, reinventing the wheel appears very much to be the point. Using a new type of money and old pipes will probably not bring all the value proposition of digital assets. When you reinvent money, it's a good opportunity to rethink the world ecosystem, aka the financial infrastructure, global. As it happens, this is exactly what concerns the United States, the country with the most to lose from a diminution of SWIFT's role in the global financial order. Part 3 will examine how power and privacy may change with the new money. So this is a huge threat, people. I mean, don't think the U.S. has been quiet. Do not think that they have been idle. I do not believe that for a second. Piggybacking off of that previous article, I'm trying to read and talk at the same time. Former Bank of England Governor Mark Carney, super smart guy, said the world is heading for a new monetary system, potentially with a greater role for distributed forms of finance. Well, we all know about distributed ledgers and all that kind of stuff. I know a couple companies that are running that. I didn't need to click that. I already had it open. Carney warns CBDC delay play into the hands of big tech. This is the other part of it. They are trying to stop people like Google, Amazon, Facebook. Facebook failed with Libra, then they rebranded as Diem, brought some people over from PayPal Galactic, mind you. Nobody talks about that anymore. But this is a narrative, man. It's the race is on. Crypto's top VC is playing the long name. Katie Huang, co-chair of Andreessen Horowitz, early investor in Ripple, is heading up the $2.2 billion crypto fund and is betting that blockchain will be as big as the internet. I think it will be bigger. Digital asset investor always talks about how when the dot-com boom was happening, it was just people kind of freaking out and throwing money around. These companies have real business plans, real roadmaps, real funding. I think it's going to blow the dot-com bubble out of the water, and I don't think it's even started yet. Here, speaking of digital asset investor, he's got a couple clips here from Matty G, XRP's, who actually I need to give a follow, from his YouTube channel, interviewing Quincy here, who is a Corda developer. He's AWS certified, multiple things, and he has a very good way of talking about this stuff. It sucks that Matty G has now had to watermark his videos. Apparently, people were really monetizing his content without permission, so he has now had to go that route. Shout out to him and Quincy for all the recent work they're doing, though. It's been exciting. Let's listen to what Quincy has to say.
Now, I think we're going to do the same thing when it comes to a gold standard, but it's not really a gold standard. We're going to go into a crypto standard where all fiat currencies are going to be issued on top of XRP or any of the other ISO coins, but it's primarily going to be XRP. And fiat isn't so much going to be made up fiat out of nothing. It's going to be the fundamental value of the XRP token that's going to be issuing a dollar value. So let's say each XRP was worth $100. That means you can issue 100 fiat dollar tokens of this. Now, what's going to happen is it's not so much that the poor people are going to use fiat. It's more like everybody but the rich bankers are going to use fiat, while the bankers use the real money for international and global trade. And here's the scam. So you're going to end up getting $1. So let's say XRP is worth $100. So for every XRP, there can be issued $100 worth of value into the system. Let's say XRP goes up from $100 to $150. Well, the bankers are going to have the value of the XRP, which is going to be backed by some fundamental value. It could be gold. It could be this thing. It's not really going to be backed. It's more of those backed assets are going to be on XRP, pushing the value of XRP, because in order to buy those assets, you have to buy XRP. But it's all going to be it's going to be entirely a banking thing. Regular people will never touch XRP ever. Now, what's going to happen is you're going to be issued dollars. And just like how dollars are now, they will be inflated away at will at any given time. What's going to happen is the underlying asset value of XRP, now it's not going to be going up moonshot forever. It may end up having a gold curve where you may see the value of XRP go up with global economic growth, like GDP growth globally. So you may end up seeing XRP grow like 2, 3, 4%, whatever global GDP is.
Yeah.
So because all the assets that are under it are all growing in value with it.
Yeah.
A smart guy. Let's listen to another continuation of that same conversation.
Talks about how the bankers are going to use XRP as an apex asset to issue underlying assets on top of it. Those underlying assets are paper worthless. They don't really mean anything outside of, like I said, they're no different than this stock outside of somebody buying that stock, or no different than a piece of paper outside of somebody buying that piece of paper. The apex asset, whether it's the ISO coins or XRP or whatever, it's going to have the overall fundamental value based off the amount of global GDP that's operating under these assets. So what does that mean? Well, that ends up meaning that the money that you go and you get paid with and get paid at the store with will continue losing its value, while the people that have the apex currency can basically print or destroy dollars at will while maintaining their value. So that $100 you had, they could destroy it and then take that fundamental value that's in XRP and put it towards something else. But you could never take that $100 and destroy it and do anything else with it ever. You see what I mean?
Yeah.
So what does that mean? Well, what happens if we're going into a recession? Rut-row, there's a lot of cash in the system. Rut-row, not enough cash is moving around. Well, what the bankers are going to do is they're going to destroy the cash, take the underlying value of that XRP that the cash was backed by, and then buy assets with it, while everybody else is dealing with the depression or recessionary situation that they're in. Basically meaning that same $100 worth of value that everybody else has in cash fiat, the bankers can basically take that through XRP and put it into anything else that they want. Bonds, treasury, with instant liquidity. They can put it in anything they want, while everybody else is settled with dollars, basically, while they have an apex currency that, let's say the dollars were getting inflated away, and let's say inflation was kicking in. Well, if they were holding XRP, and instead of having to deliberate in dollars, they could destroy the dollars that the XRP created. And that's saying it's not that XRP is creating dollars, it's a derivative. It's almost like you had gold back, or dollars backed by gold, dollars backed, that was backed by XRP. Instead of that's the thing though, they can control the money supply and how many dollars are in the system because it's digital, and then take the overall value that dollar represents, and like I said, put it into anything else.
I tell you what, man, Quincy does a great job of explaining some of this stuff. We're going to end this one with an article that's keeps popping back up. The SEC moves to block Ripple from questioning former SEC Director William Hinman. The SEC states that far from presenting exceptional circumstances sufficient to justify such a deposition, these proposed inquiries, the answers to which are at least partly protected by the deliberative process privilege and to the extent not privileged, could be obtained through far less intrusive means, relate to the everyday task of most high-ranking government officials. So Jeremy Hogan paraphrases, in other words, President Biden being the head of the executive branch, but we can't depose him every time the FDA is sued for not approving a drug. You have to show why you need to specifically depose him. I think that narrative is building huge. Hinman and Clayton had massive financial positions that benefited from what they did when they were in office. And should Ripple win the right to depose Hinman, the deposition will take place on June 30th. So we should hear news about that today. And with that, I'm going to end this video, and I will try to drop another one out this afternoon. You guys have a good day. Enjoy the green wave and just pay attention. You never know what's going to happen. Things are going crazy right now.